I think those are very legitimate worries. The inflation data, I mean, I could flip that on its head a little bit and say, well, prior to the last few weeks or so, you had a very accommodative, sort for the past year on ag prices broadly, wheat prices specifically, and oil prices, of course. So it sort of depends on how quick these moves are and whether they persist in terms of price levels and continued gains to sort of affect the inflation outlook. The other positive thing is if you look at core inflation across EMs, so like take the major 15 EMs, core inflation actually is at about 3%, not far off target for the median EM. There's obviously some dispersion around that. That has been actually a quite solid theme. So to some degree, I'm a little bit less worried. I think you have to see persistent sort of top line, like headline CPI pressures, as you mentioned. I think where the real risk is that basically EM rates have been priced for significant easing. We probably won't get that. And now the sort of rate differential between EM local bonds and U.S. Treasuries is very thin as well.
Who's most vulnerable to outflows in the current environment?
Yeah, that's a good question. I mean, of course, it depends on the source of the risk. So, for example, take the view on oil, as you mentioned, which I think many investors are discussing this week in particular. Not just a continued move higher of a few dollars, but a potential spike. That's at least a concern. So naturally, the Asian importers, the Koreas of the world, India as well, typically show up in your strategy 101 places as being vulnerable. I think that sort of makes sense. I mean, frankly, India has traded very defensively, in the past couple of years, so I'm not so sure that's the place to look for risk, for example. But really, what would a spike in oil that's supply-driven, really represent? Probably a broader consumer growth shock, particularly maybe in the U.S., where the consumer has been, quite resilient. The labor market, as you mentioned earlier, has been very tight. I think that's more of a broader risk off. And you get back into sort of who is high beta to that. The exporters, whether it's to Mexico or, again, parts of North Asia, would appear vulnerable on that sort of basis.